Hey traders! Welcome back to the channel. In today's video, we're going to talk about market structure shifts or MSS, a key concept in understanding how trends transition from bullish to bearish, or vice versa. This one concept was a complete game changer in my trading journey. Once I understood this, I was able to filter out so many bad trades. Once you master it, you'll be able to spot trend reversals, time high probability entries, and avoid getting trapped in the wrong direction. So let's jump right into it. What is a market structure shift? A market structure shift happens when price breaks a significant high or low with displacement, signaling a change in trend. If price breaks a previous low with a strong bearish move, it suggests a bullish to bearish shift. If it breaks a previous high with bullish displacement, that's a bearish to bullish shift. It's not just a pullback. It's a sign that the market is about to change direction. Technically, a market structure shift occurs when a swing high or low is violated, followed by a strong, impulsive move in the opposite direction, confirmed by a displacement candle, preferably with volume or rejection. In bearish MSS, price pushes above a previous high or swing, then quickly reverses with a strong bearish candle. That candle should close lower with possible volume or rejection wick. This is the moment that tells us smart money or the algorithm is likely shifting gears and preparing to move the market to the downside. In bullish MSS, price drops below a previous low or swing, then sharply reverses upward. A strong bullish candle forms, closing near its high, ideally with good volume. Don't take this at face value, study it for yourself. Check the charts and you'll find this setup happens repeatedly, with fair value gaps often acting as the trigger point for these structure shifts. Now that we're familiar with the concept of market structure shift, we need to understand that not every MSS is valid or tradable. We see many fake MSS setups on the chart every day. So, in order to identify which MSS is valid, there are a few key rules and conditions we need to follow. Number 1. FVG confirms the shift. To confirm a valid MSS, you need to see fair value gap, a strong, impulsive move often caused by institutional players. A common mistake: traders misidentify structure shifts without displacement. For a market structure shift to be valid, it must be obvious and aggressive. We need to see a strong FVG, not a small hesitation or range breakout. FVG acts like a signature of smart money, showing that big players are behind the move. No FVG, no shift. Number 2. Close candle with body not wick. For an MSS to be valid, we need the high or low to be broken by the candle body, not by the wick. If price only wicks above below a significant swing point without a candle body close beyond it, the shift is unreliable. Number 3 is liquidity sweep. A market structure shift is almost always linked with liquidity grabs. Price often hunts stops above previous highs or below previous lows before shifting direction. That's why MSS typically occurs after a sweep of a liquidity level. I personally prefer to see a liquidity sweep or a stop raid before the structure shift. This often forms a breaker block and provides resistance liquidity, which strengthens the setup. Number 5. A high probability market structure shift usually happens after the final phase of market maker models. This means that the most reliable or higher probability market structure shifts tend to happen after the market maker has completed their manipulation or liquidity hunt. Once the market maker has taken out liquidity, the price is more likely to make a clean and committed shift in structure, indicating a potential trend reversal or strong directional move. Number 6. Timing MSS. The timing of MSS matters. Here are the most important sessions for spotting meaningful structure shifts. London Asia close, 7 a.m. to 12 p.m. Good for identifying liquidity runs and potential Asia session fades. London close, 5 a.m. to 8 p.m. Often sets up New York reversals or continuations. New York session, 2 p.m. to 5 p.m. Don't confuse MSS with a liquidity grab. Beginners often mistake a liquidity grab for an MSS, but they're very different. A liquidity grab is when price quickly spikes above a high, or below a low, just to hit stop losses, then reverses. It's often done by large players to collect liquidity. An MSS is more significant. It shows that the market is likely changing direction and starting a new trend. So, don't be fooled by a wick alone. Wait for a strong body close to confirm a real shift in structure. Pro traders use MSS not just to enter trades, but to understand what the market is trying to do. Now look at the real chart. We've marked the previous day's low as sell-side liquidity. We're watching how price reacts around these levels. As price moves, we want to see a clean break above a key high to confirm a bullish shift. Price first makes a new low and finally, price aggressively closes above the previous high with large candles. That's our bullish market structure shift. Now that we have MSS, we look for a setup. We have a fair value gap and a breakaway gap. There's also a breaker block. As price returns to the FVG and breaker block zone, it respects that level and then displaces higher again. From there, price continues upward and completing the move. Now let's look at pound on the hourly chart. We've marked the order block and watch how price reacts when it taps into this. Price enters the zone with a strong bullish move. But we wait for confirmation, a displacement below a previous low. Once we get that strong close below the low, that's our market structure shift. Now, we identify the displacement range and use it to define our premium and discount zones or OTE zone. We locate a bullish order block, FVG and IFVG in the discount area and OTE zone. Price pulls back into the order block and reacts strongly, another confirmation. From here, we see continued bearish movement throughout the week. Let's recap of what I look for in a market structure shift: engagement with a higher time frame level, a liquidity sweep, aggressive displacement breaking structure, a valid setup, fair value gaps, breaker blocks, OTE, etc. Once MSS is confirmed, I then focus on entries and trade setups based on confluence within that structure. If you found this video helpful, don't forget to like, subscribe, and drop a comment below. What's your experience with MSS? Any questions? Let's talk about it. Thanks for watching, and see you in the next one.